you know this, but I partnered with DAT. We do a This Week in Freight 3 times a week right now. We do dry van, flatbed, reefer. And for me, it's all about, all right, so things are going to happen. So what? We still got to move freight. To me, there's always consistency and stability in the market. People just don't want to look for it, right? And yeah, rates rise, but they stabilize as well, and they stay in the exact same spot. So this one today, there's been a lot of focus on Florida that has come through because these are all viewers submitted. So this one, it's Tampa, Florida to Cleveland, Ohio that this came out. And I'm looking at this, and obviously it looks like April, May are the peak produce season in Florida.
It's flowers. It's Mother's Day.
Okay.
And Memorial Day. Sorry, Memorial Day and Mother's Day. So that's why it goes crazy, because a large portion of mums all come from, I believe it's South America. It's either South America or Central America, and they come through that Miami port. So there's a ton. The Miami port's the floral capital of America. So that's why May. You also have asparagus coming through there for the next 2 months. Most of that's coming from, I don't remember if it's Chile or it's somewhere down South America. But flowers drives that Florida market crazy.
And because I'm looking at it now, because I always look at everything on a rolling 12-month cycle, right? So if you're looking at this, is this essentially how throughout your history in moving reefer freight, this is how the outbound Florida market performs?
Oh yeah. And most of the time, like May, if you're not hedging on the side of the high side on DAT rates, you're going to get burned when it comes to reefers. So, May's crazy. I mean, there's days where there's just legitimately no capacity, like legitimate, because their demand goes through the roof in May. So
what are you, what are some of these things? Because if I'm looking at this, in 2025, it was, it was essentially $1,900 is what it was moving from Tampa to Cleveland for. But now this February, where there's like a $400 rate increase that was reported out of there. What key things do you tie that into specifically in, for the state of Florida?
So, I mean, obviously everything politically that's been going on, right? The non-domicile drivers, I think has been a major factor in, I think the 3 states that have been impacted the most is Florida, Texas, and Arizona. At least from my perspective, right? From the freight that we move, we've seen the largest impact out of those 3 states from drivers not wanting to go there, which obviously is going to diminish your capacity for outbound loads out of there. There's Florida, for example. I know when this whole non-domicile thing started, they had like legit checkpoints at the borders. Like if you were driving through there, it didn't matter what you looked like, what truck you were in. They were checking you for papers. And a lot of people, it's not that they're not compliant. It's just, they just don't want that hassle. It's just like road check week, right? Yeah. A lot of people, it's not that their brakes are bad. Well, hopefully they're not anyways if they're on the road, but like, it's not that. It's just that they don't want to. I mean, there's been years on road check week, for example, where they have a 12-hour wait coming out of Salinas because there's so much outbound volume coming out of there. Those trucks just start piling up early in the morning. By the end of the day, if that's when you're leaving, there's a 12-hour wait for those guys to do their 30-minute check on every single truck, right? And so I think that that's been the main catalyst, because we've seen pockets where rates are down from last year. And I know that probably not a lot of people are going to agree with me on that, but we have seen pockets where they are down, and we've seen pockets where they're substantially up, Florida being one of those markets. I know, I'm really good friends with Dean, and I follow all of his content. And I know a couple of weeks ago, we saw a major drop in Florida, and then all of a sudden it started spiking back up again last week. So I think a lot of that had to do with weather. Florida got some snow, which was very odd. Completely destroyed the berry crop out of there. They did not have a good produce season. I mean, from the ag estimates, from what I read, it was, in the billions of dollars in losses. So, I think that I think a lot of it's the political stuff that's going on right now. And, we're feeling it. We're both in the valley. So like Arizona's been terrible. And it's not just, I got plenty of friends that move produce and move outbound freight out of Arizona. It's not just us. Everybody's, feeling that capacity crunch. It's kind of weird though, because if you look at like Nogales, for example, the volume out of Nogales is down substantially, especially with all the turmoil that was going on the last few weeks in Mexico.
Yeah.
But rates are still going through the roof because there's just no capacity.
Yeah. So like, I guess if you're out there, you know, specifically for Florida, because we're kind of on the early side of the flower push and everything that you're talking about, Mother's Day, Memorial, and all of that stuff, how should people prepare for this then? Are they like, if we're looking at last year's peak rate in May from Tampa to Cleveland at 28.50 essentially, how much of an increase would you advise people to possibly bake in with everything that's going on right now? Is it 15%, 20%? What, or is it
I'd be on the 20 to 30% side, to be honest with you. And that's, you know, that's figuring just based off of what we've seen in the last 3 months.
Yeah. Okay. No, that's fair. Right. And I think that's what people need to be looking out for it's like, you can't necessarily go to your customers after the fact, you know, like you gotta start having these conversations beforehand about a lot of situations, because again, there's a lot more stability out there in the market than people want to make you believe, right? Like, and I say that in the sense of like, markets essentially perform the same year in and year out. They're going to have a couple of peak seasons, and you got to ask yourself as a provider during that time, do you want to weather this storm, or do you want to risk the fact that there are other competitors out there that are willing to work for slim to none for a short period of time when that inevitable cliff starts to fall back off and this specific lane, that, all right, they got 60 days, maybe 90 days of freight where they're going to be probably breaking even on it, or maybe making 5%, but then it starts to slowly drop off. Where do you want to be after that drop off? And I think that that's what people need to start approaching when they're going out there and trying to build a book of business.
Yeah. And I mean, the people who can absorb those, I mean, and potentially they might be operating at a loss for those, you know, for maybe May, but if you can have consistent freight out of Florida all year long and you lose 1 month out of the year, and at the end of the year, you're in the green. I mean, that's welcome to brokering, right? Like, this isn't, you know, you mentioned earlier, like there's some people that think that they have to make money on every single load. And look, everybody has a puke point. Every company has a puke point, and everybody's is different, how much losses they can absorb. But as a broker, you better be able to, if you feel like you can make $1,000 on a load, you better be comfortable losing $1,000 on one.
Yeah, shoot, I agree. That's it for this lane, you guys. Tampa, Cleveland, it's probably going to perform the same, but per Cody's advice, you should probably be looking in that 20 to 30% range in a rate increase from last year to this year, just due to the current environment and what's going on out there. If you want your lane broken down on the show, you guys, I need you to email my team, podcast@freightcoach.com. I don't need anything other than a shipping city, delivery city, and a trailer type. We'll take it from there. Again, we're here to help you guys remove this facade that it's just so hard to read a market. There are challenging times, yes, but there's a lot more stability out there than you think.